So we were busy with 2019 normal question paper of financial accounting 1A. We completed question 1 that was on, where am I? That was on partnership. Yeah, partnership. And then in question 2, right? Yes, in question 2, which was still on partnership. So yeah, today we are actually starting off with question 3. I can't hear you. I actually opened the wrong document. I was just supposed to open the previous one where we already did calculations of question 1 and 2. So let me quickly just look for the document. My files here. You cannot minimize Zoom. Okay. So it was 20. What did I save this as? Withdrawal of your partnership, financial, I don't know. Actually, don't know how I saved this. This yeah, it's supposed to be here. No, it's not this. It's not this. Okay, let me see if I'll get it through document, because I don't know where I saved it actually in body. Yeah, here it is. Oh, it was actually on the desktop. Okay, can you all see it? Can you all see the screen?
No, I cannot see the screen.
Oh, okay.
No.
Let me show it again. And now? Is it
Yes, we can see.
Yes.
Okay. So this was question 1 and then question 2. So question 3. So question 3 on this normal examination paper. You are given a statement of financial position and you're also given some information down there. And then you are required to calculate the member's interest and prepare the statement of financial position after the change in membership interest. So what happened is you are told that at this stage, Barry decided to sell 1/5 of his interest to Rita. Currently, Barry has 50%, Rita 35%, and Tony 15%. However, Barry decided to sell 1/5 of his interest to Rita. So Rita obtained the interest at the value of 25,000. So she paid 25,000 of that value, of which 15,000 was paid into the bank account of the CC as a loan to the credit of Barry. And then meaning that the 15,000 was paid, instead of paying it to Barry, she decided to pay it into the bank account of the CC as loan to the credit of Barry. And then lastly, Rita paid the balance of the selling price to Barry from private funds. So the remaining 10,000, the remaining 10,000 was paid from Rita's private funds directly to Barry. So number one, you are required to calculate your new membership members' interest. You need to calculate your new members' interest. Okay, now you have Barry, because the transaction, this transaction actually is just between Barry and Rita. So Barry currently has 50%, ne? 50%. And then you are told he is to give, he sold 1/5 of his interest. So 50% of 50 multiplied by 1/5 . So what happened is that Barry had 50% interest, and then he was told that he sold off 1/5 to Rita. So that 1/5 of 50% is how much? How many percent is that? Anyone to calculate? 1/5 of 50% is how much?
0.1.
That is the same as 10%, ne?
Yes.
So it's actually 10%, meaning that he sold off 10% to Rita. He sold off his 10% to Rita. So Rita has how much currently? Rita, you're told that she has 35%. Ne? She has 35%, and then she received 10%, 35%. She received 10% from Barry. After she bought 10% from Barry. So how much will be her interest now? Her interest will be 45%, right? And then if we are to calculate Barry's new interest, that will be 50%. And then we subtract the 10% that he sold off to Rita. How much will be his new interest in the business?
40%.
It will be 40%. So it will be 40%. So the new interest will be Barry will have 40%. Or Barry will have 40%. Let's start off with the one with a higher amount. Rita will have 45%. And then Barry will have 40%. And then Tony's one is unchanged. Ne? There was no effect on Tony's interest. So Tony remains at 15%. So if we are to add up all this percentage, will they still give us 100%?
Yes.
So that was your question one. So your new interest will be Rita at 45, Barry 40, and Tony 15%. Are there any questions? Any questions?
So that's how.
No questions. Understood.
Okay, yes, so that's how you
Calculate the members' interest.
usually calculating members' interest, it's just the same as partnership. It's not just one way. It usually depends to how the question is out, like to what the question is saying.
Okay.
So it just depends on the question. Because like in this case, Barry actually sold off part of his interest to Rita. So that's how you calculate it.
Okay.
And in most cases, that's how they ask. Any other questions?
No.
No.
Okay. So after now we got our new members' interest. We are now required, that's already 6 marks there. We are now required to prepare the statement of financial position for the CC after the change in membership interest. No comparison figures or notes are required. So you need to drop your statement of financial position only for 2018. You do not need to include the 2017 figures, and also you do not need to include any notes. So let me draw up our statement of financial position. It's actually just 2 tables in this case because it's just 2018. Let's just move it to the next page. Okay. Okay. So the first thing there we have assets. So in this case, because you are already given a statement of financial position, so you just copy as it is and then you just edit. You will just have to edit. I hope that is clear.
Oh, we just have to edit the percentage of how much the person is getting.
No. You already given a statement of financial position. So what you do is you have to draw the same financial position. However, you will have to edit the affected accounts.
Oh.
Yes. So we have non-current assets. We have non-current assets. Under non-current assets, looking at these changes in membership interest, did it have any effect on our non-current assets?
No.
No, so we have to write the number as it is. Okay, this is actually 2018. Actually forgot to write the year. So therefore, our non-current assets were not affected. So you have 220,000. And then, my pen. And then we move on. Thank you very much. And then we move on to current assets. Now, current assets involve a lot of things which also include the bank, the cash, and so on. Now, looking at this information that was provided here, is there any effect on our current assets? Like in this case, you are told at this stage, Barry decided to sell 1/5 of his interest to Rita. Rita obtained the interest at a value of 25,000, of which 15,000 was paid into the bank account of the CC as a loan to the credit of Barry. Take note of that.
Miss?
Yes?
Miss, can I ask you?
Yes?
Don't we have also to include the 2017?
No, it says if you read at the question, It says no comparison figures or notes are required.
Okay.
You include 2017 if you are not instructed, because yes, that is the requirements of drawing up the financial position of the close corporation. So in case you are not, when you are not told not to include the comparison figures, then obviously you need to include them. But right now the question says we should not include the comparison figures.
Okay,
That's why we are
Miss,
only doing for 2018.
Thank you.
Okay. Okay, so in this case, you are told that 15,000 was paid into the bank account of the CC as loan to the credit of Barry, meaning Rita obtained the interest at 25,000. That 10%, you obtained it at 25,000. Eh? So 15,000 was paid into the bank account of the CC, and then the rest was paid into Barry's personal account, personal bank account. So yes, our current assets also include the bank. Ne? That's why our current assets in this case are affected. Do you all understand? Guys, am I making sense?
No, just repeat a bit there.
So I'm saying that we know current assets are made up of different accounts. Ne? We have debtors, we have cash, we have bank, we have inventory, and so on. That's what makes up the current asset amount there. Those type of accounts. Now, after reading this paragraph, you are told that Rita obtained the interest at the value of 25,000. That 10%, she obtained it at the value of 25,000, of which she paid 15,000 into the bank account of the CC, meaning 15,000 was paid into the bank account of the CC, and therefore the bank balance of the CC was affected. And bank is part of our current assets. Therefore, we need to adjust our current assets. Do we understand?
Yes.
Okay.
Yes.
So our current asset amount in 2018 was 132,000. And then we added 15,000. So how much will we have? What will be our new balance?
147,000.
147,000. And then from there you have total assets. Do we understand?
Yes.
Okay.
Yes.
Yes.
And then we have total assets is how much? What will be our total assets?
367,000.
367.
Yes.
367,000. Is it? Okay. And then from there we move on to members' contribution. Sorry. That's not the heading. Capital. We move on to our next session, capital. Sorry, technology. Capital and liabilities. Under capital and liabilities, there we have our members' contribution. Okay, so we have Barry. Hold on. Lost a thing again. Just give me a minute quickly. Okay. So Barry, what is Barry's new interest?
40.
So Barry's new interest is 40, so you have to state it. And then his capital contribution, he is still 70,000. And then because he actually didn't add anything. And then we have Rita.
45.
Rita is now at 45. Rita is 45%, and her initial contribution is 50,000. She did not add anything. She did not. And then we move on to Tony.
15.
Tony has 15%. And therefore his initial contribution to the company was 60,000. And then from there we move on to the next account, retained earnings. Is there any effect on our retained earnings? Any effect on our retained earnings?
No.
There was no effect on the retained earnings, so we write it as it is. The amount is 90,000. Okay. So those were the only changes under capital. And then we move on to non-current liabilities. Now, under non-current liabilities, do we have any effect? Huh?
Yes.
Yes. What is that?
The 10,000. Oh, the loan to the credit.
The loan. We said that because the 15, when it's kind of like when you sell off your interest, when you sell off your interest, the person that you sell to was supposed to pay directly to your personal account. You understand? Because that's a transaction between you two. So the whole 25,000 was supposed to come directly to Barry's personal account, bank account, not to the CC. But they decided that, okay, 15,000 should be deposited into the CC bank account as a loan, in the form of a loan. Kind of like Barry gave a loan to the close corporation. Do you understand?
Yes.
Okay, so obviously loan is part of our non-current liabilities. Therefore, our non-current liabilities are affected. So our non-current liabilities were how much? How much?
0.
0.
We're 45,000.
45,000.
And then we added, this was quite very easy.
The 10,000. No.
Plus, is it 15,000, ne?
Yes.
15,000
Yes.
is Huh?
Gonna become 55,000.
60,000.
And then it will be
60.
60,000. And then we move on to the last thing, which is our current liabilities. Under current liabilities, were they affected?
No.
No. So you write the amount as it is. Now, why are we not recording the 10,000 remaining out of the 25,000? Why do you think you're not recording that?
The what?
Remember, the total
Because it
value
went
of
to
the
his personal
the
account.
total value of the interest was 25,000, right? We recorded the 15,000, but we never recorded the 10,000. Why do you think so?
Because it went to the personal account.
Because it went to the Barry's personal account. So that has nothing to do with the close cooperation anymore. Do you understand?
Yes.
So if you are to add up our capital and liabilities, how much will we get? Just hope it balances. How much are we getting?
Mm, 330,000.
67,000.
367.
67.
So our assets are equal to our
Liability.
capital and liabilities. So that's what you were expected to do. Any questions?
Yeah.
Any questions?
Sarah,
Yes.
should we not be like if we're not instructed as no comparison figures, now these effects that affected 2018 will also affect the 2017 figures, or how?
They won't affect the 2017 figures. Why? Because the change was made in 2018. And again, it actually just depends to the requirements of the CC. Ne? Because I remember, like for instance, when it comes to companies, ne, the requirements of the company states that if there's any changes in any accounting policy like in the current year, then they'll also need to do necessary changes in the comparison year, in last year's statements of financial position. That is now of only the limited of the companies. That's the requirements of the companies. But in this case, close cooperation. So in this case, the close cooperation, the changes in membership, because this is not a policy, but it's actually just a change in membership interest, and it occurred in this current year. So I don't think it will have to affect any previous comparison in previous year.
Okay.
Yeah. But let me find out more on that, then I'll get back to you.
All right.
Yeah, if it's the same as the company's one, because if the company's one, you have to amend also the last year's information. So let me just find out on the close cooperation if it's the same. We actually forgot the members' contribution. Sorry, 180. 180. What am I doing? 180,000. We omitted it actually. Do we have any questions?
Okay.
Miss, have you done question 1 and 2?
Yep.
Okay.
We did question 1 and 2 last week, but because of my poor connection that I was going through last week, I could not upload the videos on YouTube, but I will hopefully do them tonight and be able to send all the links.
Okay, Miss.
Yeah.
How should we find it again, Sarah, on YouTube?
I'll send you the links because it's a private account. Like you will
Okay.
only be able to view them if I send you the link.
Oh, okay.
Yeah.
Okay.
Where did,
And Miss, can you
where did
also
you
like
get the 180,000?
Where did we
yeah,
get
it's
there?
here. No, it's fine.
Oh, okay. Yes.
got it.
Yes, Joel.
Miss, can you also like give us the solution like in PDF?
Yeah, I'll do that. But with the solutions, should I give you the solutions today or after we are done with this question paper?
When we are done with the question paper.
Okay. So the next question, we have 3 minutes left. We are done with question 3. So the next question is manufacturing. Ne? The next question is manufacturing. So I actually just wanted to find out if we should first explain manufacturing like we did now, or we should just start off already.
I think it's best if you first explain because some people don't really know what is happening.
Okay.
More especially explain, Miss, how the journal entries.
Or with the journal entries of.
Yes,
Okay.
because theory will just be a waste of time.
Yeah. So yeah, in the theory we'll just go through. The only theory I will explain is the accounting records. I don't understand. I'm not getting you. Okay. The only theory under this section that I'll explain is only the accounting records, because that is the main thing, the accounting records of the manufacturing, what you need to different accounting records that you need to do.
Yes.
Yeah. Then we can do this. Yes. Is it Martha? Yes, Martha?
Martha.
Yes, Martha?
Yeah. The 180,000. Are we also adding its member contribution?
The 180,000. The 180.
Contribution. Are we also adding it?
There is noise.
The one, no, the one, no, the 180,000. No, I got, no, Martha, I got your question. The 180,000 is the total contribution of, if you add these three amounts together. So you do not include it in the three, it's not included, it's already, you do not include it in the calculation, because 180,000 is actually the total of 70 plus 50 plus 60,000. Yeah, so when you are going to when you are going to calculate the 367, you don't include the members' contribution anymore. This is kind of like total capital. Do you understand?
Okay, I got it now.
Yes. We only have less than a minute, so the class might end itself soon.
Yeah, I got it now.
Okay.
Miss, what time is